Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading, coming to you from the laptop again, from the couch. So today, it's really nice out. So I ran another 5K. If you're in our Discord, which I strongly recommend you joining, you will know that I like to exercise a lot. It's really good for traders to get out, get into the sunshine, and get some exercise. And, it's good to release some of that trader energy, and it's also good for your health. So anyway, that's 2 straight days that I ran 5Ks. My feet are killing me. I think I might have a blister on one of them. So anyway, I want to start. Obviously, this video is about how did I go 1 for 3, which is 33%. How did I go 33% and I was still profitable? Well, I'll get into that in a second, but I think that this is so important. I want to go over this first. Just going to my daily set. I want to show you guys the bounce off the 50-day moving average that we're seeing on the ES right now. This is so important. You can tell, you can see right here, we rebid it here. We bounced here, bounced, rebid, bounced, and we're in the process of bouncing again. This has been the story literally for the last 6 months. We have held above the 50 moving average. Going into today, I posted on our Discord, I said to look out for this. This is something you're going to want to see, and we are seeing it. We're seeing a huge candle the day after the bounce. That is what we wanted to see. We want to see a candle engulfing or just about engulfing the previous weekday. That means that the computer algorithms are buying at the 50-day moving average. It's happened the last 6 months. There was no reason for us to come into today without knowing that at the very least, a pattern that repeats itself for basically the entire year should be on everybody's mind. And I tried, posting on Twitter, in our Discord, bringing it up in videos. Everybody needs to know these things because the computer algorithms are doing most of the trading. So they are set to buy all these underlying assets and equities that make up the market when the market pulls back to the 50-day moving average. So this is a nice start. It is still an hour and 42 minutes left of the trading day. We all know anything can happen, especially in this market, but following patterns is really, it's key. You need some kind of compass, and I like this bounce. I like what I'm seeing. Hopefully we get continuation, because overall, I'm a bull in the market. I like when the stock market goes up. It's been quite a run. And, this is good for the SPY and good for everything else. All the stocks will go up, at least most of them, especially if we go to new all-time highs on the ES. Now, it doesn't mean it has to happen, but you can tell by looking back, that is the pattern that's repeating. So I can only go with what I see here. And this is the candle that we needed today. So that's what we're getting so far. So now let's go into the whole point of the video. And it's how did I manage to still profit off of a 33%, which, I'm not proud of that, but going 1 for 3. How did I go 1 for 3 and still profit. Now, these are trades that I made last night. I saw the market pulling back and then rebidding this area with, pretty good price action. So if we go in here, I'm going to show you the power of your stop loss. So if you have the right risk to reward and you don't get every trade right, even if you don't get 50% of your trades right, if you have the right risk to reward, you will profit at the end of the day. And that's what I did here. So right here, the reason why I got short is because we were coming up to this very key level. So we broke the key level on a lot of volume, came back up to it, retested it. I got short. It didn't work out. I had to stop out. I set my stop, just above this area, and then price ripped up. Once price got to VWAP, that is when I was, didn't consider it. I took it short here for the rejection at VWAP and the continued downtrend. So when the market is trending down like this, and in Asia it was, and this is the Asian Open started here. When the market's trending down, my overall bias is short. So that's what I was doing. Right when we came up to VWAP, I took a position right here at the top of this candle. I had to sit through a little pain, but this candle right here told me I was in the driver's seat. It could not hold VWAP, a huge rejection. That's where I love the trade that I'm in when that happens. So the risk to reward. On these two trades, these two losing trades, I cut it at 1 point. This was a 2 point, a little bit more than a 2 point win. So I lost 2 points here. I gained 2.25 points here. So on one trade, I wiped away and then some these two losing trades by keeping my stop tight. Now, if I did not keep my stop tight here, this would have went all the way against me and totally ruined my day trading. And that's the whole point here, is to watch your risk to reward. Now, if you're somebody that sets a wider stop, you need a wider reward. So if you want to go and set your stop at 3 points on the futures, then you need 6 points. You need to at least go to a 1 to 2. So a 1 to 2 risk to 2 reward. That's something that I try to get every time I trade, especially with the futures. And it works the same if you're trading stocks or options. You want good risk to reward because you don't always want to be right in the market. This is a perfect example of being right 33% of the time and still being profitable. So, I hope that you guys gained something from the video, especially the beginning of this video, because, we're seeing that bounce off that key area. I don't know what the rest of the day will hold. I'll know on my next video when I make it, but things are looking good for the bounce. So I hope you enjoyed this video. Keep your risk to reward really good, and you will not have to be so accurate. And if you are accurate and you do have that risk to reward, you're going to be even that much more profitable. So that's it for me. Hit the thumbs up for the video, and I will see you guys back on the next one. Take care.